What's going on, everyone? It's Marsellis back with another video, and we have to go over Ethereum Classic today. So with Ethereum Classic, we did reach a high all the way up here, way back at $170, way back at May 7th. So now we are at $77 right now. So Ethereum Classic has ended its downtrend. This is actually really good news for Ethereum Classic. We just ended our downtrend starting yesterday. We ended our downtrend. We came into yesterday strong, and then we just kept growing from there. And now we are at $77 here with Ethereum Classic. And looking at other cryptos right now, let's go over to the other cryptos right now. When we look at all these other cryptos, look at this. All these other cryptos, some of them are starting to rise and some of them aren't. But look at this. Ethereum only up 2% in the last 24 hours. Bitcoin only 1% in the last 24 hours. Dogecoin down 6%. All these different cryptos are down and down. But as we go over here to Ethereum Classic is up 7.32% in the last 24 hours. Now it just changed to 6.57. But you get the point. Ethereum Classic is up. It's beating all odds right now. It's passing everything. People say that, all the cryptos are following, Bitcoin, Ethereum. You can say Ethereum Classic is kind of following Ethereum, but we are actually growing more than Ethereum. We have more growth, more possible growth with Ethereum Classic than Ethereum, because Ethereum Classic is cheaper than Ethereum. As you can see, up 6% here and only up 2% there with Ethereum. So looking over here at Polygon as well, Polygon is up 14%. I'll be talking about that in another video, but right now this is about Ethereum Classic and what Ethereum Classic is doing. So it says we are at a 9 billion market cap here, but over here with CoinGecko it says 9.9 billion. So I don't know which one's right. One of them's right, one of them's wrong. But either way, 9 billion market cap right now, and that's pretty good with Ethereum Classic. But we have some big stuff to talk about here with Ethereum Classic. Now that we got all these little technicals out, we know what we're doing. We know we're going on an uptrend here. Now let's check out what we have going on here with Ethereum Classic. So this right here is the Ethereum Classic. Everything that you need to know about Ethereum Classic, pretty much. This is the Ethereum Classic info sheet right here. And one of the big things that we need to think about with Ethereum Classic, look at the hash rate right here. So the hash rate is 26.9 hash, right? And that comes out to be over here. It says they pay out $5 or 5 cents in US dollar per day for 1 hash. That's 26 hash. That's the average hash right there. Average hash rate, for the Ethereum miners here. So what you want to do is you want to take 26.905 and then multiply that by our hash rate, and our hash rate is 0.0597, and that is what Ethereum miners are, Ethereum Classic miners essentially are making per day. And this is just what a basic hash rate, basic mining, nothing difficult, no big facility. This is just someone mining off of one miner. This is what that miner will get right here, $1.60 per day mining. So it's a lot to actually mine these cryptos. It takes a lot to mine these cryptos, and right now that's what they're kind of complaining about inside the crypto space. Let's continue to read here, because we do have a lot to discuss with Ethereum Classic. So without further ado, let's get to our main news here. The Ethereum Classic Treasury debate. This is the main thing that we have to talk about here. So it says all right, before I start this, the Ethereum Classic Treasury debate, they had a whole call here, Ethereum Classic. They had a whole call. They were inviting all of the Ethereum Classic holders to watch this call live. And they had a whole thing, it was May 12th, whole preliminary proto treasury meeting. That's what they call it, preliminary proto treasury meeting. This is a commentary on the Ethereum Classic that someone couldn't attend, whoever made Ether plan, right? All right, so a major philosophical point. It was interesting that in the call there was hardly any mention of the option of not implementing a treasury system in Ethereum Classic at all. Implementing a treasury system is implementing governance, and a governance system financed by a tax on the network is a centralized organization. There is no way around it. It is a synthetic corporation under the disguise of a blockchain. This makes it not only not trust minimized, but prone to be considered subject for all sorts of legal liabilities, including considering the major voters and developers who decide and receive revenues from the treasury as trustees of the system. Aside from the legal liabilities, the only way I could consider the treasury proposal even feasible is if it is limited in time. My proposal to limit any version of the treasury for 5 years stands. This can be implemented by just programming the tax to 0% in a certain block in the future. Very simple. It is important for the ETC community to understand that if Ethereum Classic is to be a $6 trillion system in the future, used globally by governments, corporations, international entities, and individuals from all cultures, regions, and backgrounds, it is imperative that Ethereum Classic be as decentralized as Bitcoin. So they're trying to get it decentralized. They don't want, one person being over Ethereum Classic. They don't want to have the developers having so much so much power in the Ethereum Classic economy, really. Because when you look at Bitcoin developers, they really don't run Bitcoin. Bitcoin is really ran by the people. That's the craziest thing with Bitcoin. Bitcoin it's been distributed really well. Let's just say that, because there's no one Bitcoin wallet that holds 20%, 50% Bitcoin. It's just not like that with Bitcoin. But they're trying to decentralize Ethereum Classic 100%, just like Bitcoin. They want it to be 100% decentralized. But remember, Ethereum Classic is Ethereum, but without all the changes after the hack. And what happened with the hack, it got hacked, and then money was taken out, and then they made Ethereum from Ethereum Classic. They just upped security protocols for Ethereum, but they didn't up those security protocols for Ethereum Classic. So that's what they're talking about here. They're saying if it's going to be a $6 trillion system, it needs to get upgraded. It needs, we need to continue to work and develop Ethereum Classic. That's what they're saying. So let's look at this year, $6 trillion. So they're actually predicting that Ethereum Classic will reach a $6 trillion market cap. I'm not doubting that at all. I'm not doubting that it will reach a $6 trillion. But if that hits $6 trillion market cap, Dogecoin would probably be at $10 trillion market cap, which is not out the window. I mean, and if that happened, Bitcoin would most likely be way above 10 trillion, maybe 15 trillion. Like this, in order for Ethereum Classic to reach 7 trillion, what I'm saying is Dogecoin, Bitcoin, all these other cryptos that are above Ethereum Classic would also have to do the same kind of thing. You understand what I'm saying? Like, look at this. Like, let's see where we are. Like, we have 716 billion market cap with Bitcoin. So Bitcoin would have to go up hugely. Ethereum would have to go up huge. All these other cryptos would be up huge for Ethereum Classic to be at a $7 trillion market cap, which isn't unprecedented. It could really happen. It could definitely happen. $6 trillion market cap. I mean, not 7. So they are predicting that Ethereum Classic will hit a $6 trillion market cap, right? So at a $6 trillion market cap, let's see where the price of Ethereum Classic would be at a $6 trillion market cap. So in order to find this, we would have to take the $6 trillion market cap right here that we would have with Ethereum Classic in the near future that they're talking about. And then we would take and we would divide it by our current circulating supply, not our current, but our circulating supply after all Ethereum Classic is mined. So after all Ethereum Classic is mined, where would we be? We would be all the way here, $210 million Ethereum Classic. That's how much is circulating. And then you would see $28,000, $28,476 right there. So $28,000 would be the price of Ethereum Classic at a $6 trillion market cap, right? And we already see like Bitcoin so high right now. Like, look at Bitcoin. Bitcoin is all the way up at 38,000. We hit 60,000 with Bitcoin. Ethereum's at 2,700. I mean, I could see Ethereum all the way up to like 50K, 100K, right? Then if that gets there, if Ethereum gets there, then Ethereum Classic can do the exact same thing and get all the way up to 28K. So I definitely believe that they are right here with this. They're looking out in the way far future when they're talking about Ethereum Classic, right? They're talking about 5 years, 10 years out. That's what they're talking about. So they're not saying it's going to immediately hit $6 trillion market cap. No, they're saying all the way out 5 years, 10 years from now. All right, let's keep reading. Not even Ethereum 2.0, Cardano, Polkadot, Internet Computer, Zcash, Cosmos, or EOS may be analogies to Ethereum Classic's security. The only security model possible is the maximum security possibility attainable by a blockchain, nothing less. The only honest way to regard the treasury in Ethereum Classic is to understand that while the blockchain has that device to prop it up while it gains market share and liquidity, it is a centralized system under the use of a blockchain, a community fiat system like all the networks that use proof of stake treasuries and voting. All right, so this is the first thing that they're talking about inside of that whole meeting, a major philosophical point, right? And now number 2, the costly infrastructure versus limit in time debate. All right, so let's read over this and see what they're talking about here. An objection that was raised to the limit in time to the treasury I mentioned in the previous point is that once the developers teams form their organizations and invest in infrastructure for the network, that infrastructure will have a significant cost to maintain on a continuous basis. This means that if the treasury suddenly stopped paying them, then they would be defunded and such infrastructure abandoned. To the above, I have two responses. So they have two responses to this, the costly infrastructure. They have two different responses. So the first one is, if after 5 years of paying out hundreds of millions of dollars to developer teams and computer scientists, Ethereum Classic is still not able to attract a market with users, investors, private entities, and government using it with an interest in maintaining it, as is the case with Bitcoin, then Ethereum Classic failed. It was not the trust minimized blockchain that was envisioned by the founding fathers during the 2016 the DAO crisis, and the code law philosophy was just a utopian disbelief. And then their second point here was, 2, if Ethereum Classic is in such need to funding as above after 5 years and is worthy of saving, then the community will get together again like now and make another hard fork to change the tax perimeter and continue the treasury for another 5 years. Just a mess in Ethereum Classic Cash. The treasury is a temporary set of training. All right. So pretty much what's going on here with Ethereum Classic is they're pointing out all Ethereum Classic's flaws, all of its problems, and they're putting it at the forefront to all of the holders of Ethereum Classic. And then they actually gave us the option, the opportunity to let them know like what needs to be done, what needs to be fixed, what, they're asking people like how should Ethereum Classic be developed to be the best Ethereum Classic that it possibly can. Just like with Elon Musk and Dogecoin, how Elon Musk is developing Dogecoin with the developers, Ethereum Classic is now essentially developing Ethereum Classic with the people, literally. So this is actually pretty big that they had this actual call, this actual meeting for Ethereum Classic. So that's actually pretty big news. So the miner tax versus hash rate debate. We just now talked about this because that's kind of crazy. Look at this. So the fee and reward, the miner tax. So look at this. So the difficulty in mining 349, and then look over here, the hash rate 26 hash. And as you can see, that's in 24 hours, 26 hash in 24 hours. I mean, it's not that great. And then you look over here, it's $1.60 a day. That's what these miners are potentially making off of one mining machine. All right, so off of one little tiny mining operation, they're just making $1.60 a day. So that's not a lot, and that's what they're talking about here, right here, the miner tax versus hash rate debate. Okay, so let's go over this. In this debate, both sides are correct. They just seem to talk past each other. It is obviously a reduction in miner revenues to impose a tax on the block rewards. That is an undeniable fact. It is also a fact that if there are less miner revenues, then the hash rate is lower given a certain price of Ethereum Classic. However, the other side is also correct to point out that although the miner tax indeed reduces miners' revenue, the fact that the destination of the funds is for development and innovation actually may raise the price of the currency in a magnitude beyond the percentage of the tax. So this is actually really big, really big stuff going on with Ethereum Classic. So they're trying to up the miner hash rate. I mean, this is crazy right here. That's what's going on with Ethereum Classic. So they said, however, the other side is also correct. They said the other side is also correct, although the miner tax indeed reduces miners' revenue. So yes, they're taxing miners and it does reduce the miners' revenue, but they continue to say the fact that the destination of the funds is for development and innovation. So it's not a tax that wasn't, precedented. It was a tax that was actually needed for development and innovation. They said actually may raise the price of the currency. So just because they're taking the taxes from the miners and then they're developing Ethereum Classic with it. They're developing Ethereum Classic with that tax money right there. And the price of the currency and a magnitude beyond the percentage of the tax. So the price will go beyond the price of the tax, which means, they're getting, let's say they're getting $1.60 a day in Ethereum Classic. In about 5 years, all that tax that they paid is going to be used to develop Ethereum Classic. So about 5 years, that $1.60 that they got that one day will most likely be $10 or $20, possibly even $100 for that $1.60. Mind you, that's $1.60 that they make per day. So all that, let's say they did it for 30 days straight, they made $1.60 for 30 days straight, right? So 30 days straight times $1.60, that would bring you up to $48 every single month. But inside 5 and 10 years, that $48 that you're making every single month, let's say it goes up by, let's just say 100. That $48 that you're making every single month, now it's almost like you're making $4,800 every single month, because you're still holding all that Ethereum Classic that you mined at the $48 a month mark. But now that is 5-10 years out, 4,800. So imagine someone doing this for a full year, right? So imagine you take 365 days times that $1.60 hash rate, right? That's 584. That's $584 a year that people are mining out of Ethereum Classic. But this is at a really slow rate. Remember that. Now take and multiply that by 100. That's $58,000 a year that these miners are making 5-10 years out down the road. Now let's take this even further, right? 365 days, right, times 10 years. So that would be 3,650 days. Then you want to multiply this. This is going to keep getting crazier, and crazier. So then you're going to want to multiply that by $1.60. That's $5,800. Then you go ahead and you do your other multiplication for 100. It goes up by, like, let's say 10 years or 10 years down the road will be 58,000. But let's just say it goes up by 100 right now, 584,000. So yeah, Ethereum goes up by 100. Boom, goes up crazy, 100x. That would go right there. That would be like 5-10 years though. Remember, 5-10 years. So it's not something that's just gonna happen right out the window. It's gonna happen in 5 to 10 years. Remember that. So let's keep reading. It says, in summary, if there is a block reward reduction, it is a physical reality that miners will receive less revenues in Ethereum Classic, just like we discussed. But if the final effects of the tax is to actually increase demand for the currency beyond the 20% level, evidently miner revenue in fiat currencies will be higher after the tax. So they're saying that the miners are going to make way more money because, Ethereum Classic is going to go up. They're taking these taxes and they're building Ethereum Classic. So Ethereum Classic rises, the miners' revenue rises inevitably, right? So the above is a sort of a hybrid between an accounting and an economic gimmick. I think it will be impossible to know in the future when Ethereum Classic will be worth $6 trillion. What caused the success of the network? All right, so 4, the redistribution problem, right? With Ethereum Classic trading between $70 and $130, considering a midpoint of $100, they calculate that the developer teams who will receive the new revenues from the miner tax will get $134 million per year, while the reward is 3.2 Ethereum Classic and $170 million will when it goes to 2.56 Ethereum Classic in the next fifth inning. The next halving, I guess they say, but with Ethereum Classic is fifth inning. But yeah, whatever. I think this is an exorbitant. I don't even know what that means. All right, we're about to learn something new today here. Let's go over here and then Google search. I don't know what exorbitant means. Exorbitant. All right, of a price or amount charged unreasonably high. Okay, so unreasonably high. Now we know what that means. I think this is an unreasonably high amount of money and will be much more when Ethereum Classic takes off and trades past $1,000 as I expect. The above will make the chosen 2, 3, or 4 developer teams to receive that cash flow extremely powerful, to the point of being impossible for any community to vote or argue against them. On top of that, to demand a quorum of 1 out of 3 of all the coins issued just to fire them is a major barrier that I think must be removed. So let's read that again. On top of that, a demand of quorum. Let's go over here and search for this word. We got to learn new words here every day. So quorum, the minimum number of members of an assembly. All right, the minimum number of members of an assembly. That's what a quorum is. On top of that, to demand a minimum number of assembly. All right, so to demand a quorum of 1 out of 3 of all the coins issued just to fire them is a major barrier that I think we must remove. All right, my proposal to mitigate this problem is to reduce the miner tax to 5%. Reduce the miner tax to 5%. That is what they're proposing to mitigate this problem. Reduce the miner tax to 5%. So they're trying to reduce the miner tax here, so then the miners can, continue to be motivated to keep mining Ethereum Classic, and so the economy of Ethereum Classic can keep going and keep growing, right? So let's read here out their summary. All right, actually no, we got to go over this first. This 5% level would be $33 million and $26 million per year with the block rewards level mentioned above. This money would more than this money would more than finance great developers and computer scientists working on Ethereum Classic. So that tax money is going to the developers and the computer scientists writing that computer program to do this stuff with Ethereum Classic. And it makes me wish I would have kept doing the programming stuff. I went to college for that. But this is so crazy that Ethereum Classic is still, doing crazy numbers even though the crypto crash happened. Like, we're up 6% here. We were up 7%. But yeah, Ethereum Classic, huge right now. But yeah, let's keep going and reading this article here. Summary: the Ethereum Classic community must understand that. All right, wait, I did skip this, didn't I? This money would more. No, I didn't actually skip that. Okay, so the Ethereum Classic community must understand what is real trust minimization in a treasury system, no matter the quirks and gimmicks it may contain, will not be trust minimized and would centralize the chain while it exists. Governments, corporations, international entities, and individuals from all cultures, regions, and backgrounds in the world will not use a blockchain that is controlled by some developer in the West who can confiscate it. So let's read this. Look, governments, corporations, international entities. These are the three main things when we're dealing with crypto. The fourth major thing is individuals, but these three are kind of bigger because they just have more market cap, right? And individuals from all cultures and regions, every single background in the world, they will not use blockchain that is controlled by some developers in the West who can confiscate, tamper with, or easily coerced legally to arbitrarily modify the state or the monetary policy of Ethereum Classic. So what they're saying is people overseas are not going to put their money in Ethereum Classic if they know that an American can do anything what they want with their money. Like, let's just assume China and US start having problems. But we run Ethereum Classic because the developers who develop Ethereum Classic are over here. So they kind of run everyone's money. They're like the bank right here. But it's different with Bitcoin. Bitcoin is more decentralized, right? So when they're talking about with Ethereum Classic here, because remember, Ethereum Classic wasn't really updated like Ethereum, right? So what they're saying is if someone has a problem with someone inside of, China, US has a problem with China, and now Chinese people are wanting to take their money out of Ethereum Classic because they know that it's ran by US. So they're trying to get it decentralized to the point where not one entity is running it, not one group of people is running it. It's more so ran by the community, more like a democracy. So that is kind of what they're getting at here with Ethereum Classic. So it says the only viable option is to limit the treasury in time, with the understanding that while it exists, Ethereum Classic will not be fully and truly decentralized. So they said the only viable option is to limit the treasury in time. So remember, they're doing smart contracts here with the understanding that while it exists, Ethereum Classic will not be fully and truly decentralized. The miner taxes indeed reduce hash rate at any given price of Ethereum Classic, but those prices may probably be higher beyond the percentage of the miner tax with a treasury than without at this stage of the life of Ethereum Classic. All right, it is important to control the cash flow to developer teams, and miner tax of 5% would be a much better level, providing ample revenues for developer teams and computer scientists to build and innovate on Ethereum Classic. So you got to think about this. There's computer programmers out there, right? These computer scientists, these programmers, they're developing on Ethereum Classic. But you got to remember, they're just like us. They still need to pay their bills. They still need to pay for their electricity and all of this. And if they're working on Ethereum Classic all day, how are they able to work a job in order to pay for their bills? They can't, because Ethereum Classic is literally their job. So that 5% tax that they take from the miners is needed for Ethereum Classic. It's actually ethical. It's the only, logical thing here is like, we have to do that 5% tax. It's just kind of like how the government taxes us and then uses that money for infrastructure, for roads, for schools. But you can see how easily those kind of things can be manipulated, right? You can see how easily the government can take and put that money in their own pockets and to put that money into, their friends' pockets. And this is what happens. And this is what people are scared of with Ethereum Classic, with the, with the money going into the infrastructure. They're really scared with that because they're scared with their money going to the developers and the teams because they don't want the computer programmers to take it and not really do nothing with it. They don't want to just give their money away like that. And it's completely understandable. But see, this right here, this whole call for Ethereum Classic, the whole treasury debate, it was supposed to point out all Ethereum Classic's flaws and then point out everything that needs to happen in order to combat those flaws. And that's what they did. So that's why this seems like I'm talking bunch of bad stuff about Ethereum Classic, but it's because they pointed everything bad about it, and now they're solving it one by one. And they literally show you everything that needs to be solved, and they're literally solving it with the tax that they're taking from the miners. So this is actually really good news for Ethereum Classic, that they're being this transparent with the Ethereum Classic people. And they really predict that Ethereum Classic will be at $6 trillion market cap in the future. It's only at 9.8 billion. So $6 trillion market cap. The $28,000 Ethereum Classic, that's a lot. Like, imagine if you had 100 Ethereum Classic right now. Like 100 Ethereum Classic right now would be around 7,700. But then if you take that same 100 and do it by 28,000, let's do that. It would be all the way at 280,000. So that is crazy. You would take that 100, multiply it by 28,000 whole. Oh, not even 28,000. Okay, look, 100 by 228,000 would be 2.8 million. So that is a lot of money right there, and that is essentially where the Ethereum Classic is going to go. $28,000. If you have 100 Ethereum Classic right now, you will literally have millions of dollars in the future. That's what they're saying, and I guess I'm rolling with it. I think that the exact same thing is going to happen. I think they're going to really lock in on Ethereum Classic and really continue to upgrade it with this tax money that they're talking about. So yeah, Ethereum Classic price predictions. How far can an ETC go after the crypto crash? And they're predicting that Ethereum Classic is going to go up, but I don't see. They say by $97, 200, near 200. They say by 2022. So yeah, near $200 by 2022 is what they're predicting. And yeah, I guess we could be somewhere around there, possibly above $200 by the 2022 next year. Anything could happen, honestly. But yeah, Ethereum Classic doing great things here. Currently, miners are collecting around $1.50 US dollar in daily mining revenue on Ethereum Classic, an amazing 1,200% increase. So that's why they're taking this 5% tax. And if you really think about it, like, come on, like 5% of a dollar. I don't know why people are complaining. I mean, I guess I can understand why they're complaining about it, but a 5% tax, I mean, it's only going to take 7 cents from every single day. So they're making $1.50, but they're losing 7 cents. Like, it's not much. So they're looking like this, but they're losing something like this. And yeah, don't complain about that. Like, you still have $1.42 at the end of the day with your Ethereum Classic. But yeah, this is really crazy, the stuff that's going on here with Ethereum Classic. But yeah, remember, I'm not a financial advisor. This is not financial advice. Just a little update on Ethereum Classic and what we're doing. This is something that Ethereum Classic actually posted on their Twitter. This is just a simple fact. Anybody who's anybody knows that. All right, so they say this is just a simple fact. Anybody knows that. So this crypto bull market cycle is not near its end. I definitely 100% agree. They say Ethereum Classic will reach $1,000. Bitcoin will reach $100,000. Ethereum will reach $10,000, and Doge will reach $1 by the end of this year. I 100% agree with that. I definitely believe this is going to, this is a really big turning point for Ethereum Classic, a really big turning point for all cryptos. Like, the bull market's over. Everybody knows this bull market's over. We're continuing to rise in Ethereum Classic, Bitcoin, Dogecoin, Ethereum, everything. Shiba Inu, everything's going up right now. And June and July is about to be really big for crypto. And next year, really big for crypto. Overall, I'm holding all the cryptos I have. I'm not day trading anymore or sweep trading. I'm actually just going to start holding everything. No longer selling anything. Just going to hold it for the long term. But yeah, this is just a little update on Ethereum Classic. As you can see, we did break out of this trend line, and now we're going on this uptrend back into our bull run. The bull run did not end. It was just a little correction. But yeah, this is not financial advice. I'm not a financial advisor. And if you like this video, go ahead and hit the like button and subscribe, and leave a comment in the comment section and let me know what stock crypto you want me to do next. And I'll be back with another video. Peace.